The Fed has printed $1.6 trillion in a matter of 4 weeks for just one of their many programs. This has never happened before, not even close. Many big money managers have now gone all in, calling the bottom. Meanwhile, we are clearly about to face the most shocking economic collapse as millions of Americans have found themselves without a job and no way to pay their bills. This cannot be turned around by a $1,200 check in the mail. Brace for impact. You came here for the truth, so let me unveil that for you. I have an absolutely jam-packed episode to get into today. There's so much here. There's no way I can cover it in time, but I'm going to try. Let's move into it really quickly. Here we go. This speech is directly from the New York Fed website, and it was written by the head of the desk. And the desk is essentially the ones who are doing the trading that's happening with the repo operations, for instance. The FOMC gives them the directions, they make the trades. So check this out. In response, the desk, at the direction of the FOMC, is undertaking extensive purchases of treasuries and mortgage-backed securities to support the functioning of these critical markets. Although asset purchases are a standard desk tool, the scale of these purchases has been unparalleled, totaling about $1.6 trillion in the past 4 weeks. You have to think about that for a second. We're talking about $400 billion every single week. This has never been like this before. We have never seen anything remotely close. Now you got to understand, this is just one part of their operations. You've got every letter of the alphabet being used twice over in one of these different operations that they are doing. They are going to levels at which they cannot reverse. We have to look at this every time with the balance sheets and why they can never bring that down. In 2008, you saw that spike upward as they introduced QE1 and QE2 and QE3, and then we finally get to a point where their balance sheet's so massive and they think to themselves, we're going to bring this down, and they bring it down just slightly over a long period, and they realize, oh my goodness, we can't do this. This is going to screw everything up. And now they have spiked up with their, QE4 and QE5. You can call it whatever you want, doesn't really matter. But essentially, they are printing more money than ever before. A lot of people have been cheering this on. I've been seeing it everywhere, absolutely everywhere, from the financial analysts, the news media, in the comments section. They are saying this is good. Printing money is good. Inflation is low. I don't know what kind of world you live in, but inflation is not low, and we can see that in actual real economic indicators. Don't look at the PCE rate. My goodness, are you kidding me? Are you looking at the CPI? If you use any of these measures to actually determine what the current inflation rate is, you don't live on planet Earth, you live somewhere else. Or perhaps you are dreaming and you just need to wake up. So if you would ask somebody, pinch you, maybe, just maybe, you'd come back down to earth. Understand there's a big difference between Wall Street and Main Street, and there is this huge divide in between the two right now, more than ever before. The Federal Reserve is pumping an estimated $10 trillion in liquidity into the financial system. That's essentially earmarked for Wall Street. These trillions float into just about every corner of high finance. The Fed's new programs even allowed it to buy up mortgage-backed securities pegged to strip malls that were teetering before the issue happened. You read that right. The Fed is now bailing out Wall Streeters who bet on strip malls. This is unbelievable, but that's where we're at today. Main Street, however, and I would really use this term very loosely in this case, as I will show you what's happening with the supposed small business bailout. It's not going to the actual small businesses. A lot of small businesses, they're going to be destroyed. If not right away, once they reopen, people aren't going to just walk in the door the first day. They are still going to stay home. They are still going to be worried. Then some of these people, they've had their businesses and they really care about them. They really have a lot of employees who rely on them. Maybe they'll try to stay open for another month, another 2. They're going to add up debt. So who is going to benefit from that? Of course, the lenders. The lenders are going to benefit from that. In this paragraph, basically they're saying that while the Wall Streeters are going to get that 10 trillion, Main Street, which as I've just mentioned, it's not actual Main Street, but the Main Street is fighting for billions. And while that's a big number, by the time you spread it across the entire nation, it doesn't seem like much. I've shown you information related to this previously, but it continues on. Thousands of cars line up to get into a Los Angeles food bank, and this isn't stopping. You can see how this will continue for the time being. You've got, at the current time, 16.8 million Americans out of work, and the new numbers haven't come out yet. This is most likely going to be over 20 million. Ruths Chris Steakhouse gets $20 million from the Small Business Administration funds. And this is interesting because they're not exactly a small business. They have 159 restaurants from what I read. They have these 2 subsidiaries, so they got 10 million each. And meanwhile, I've been reading that the maximum is going to be 15K for small businesses. So what's going on here? Is this favoritism? Is there something else? The whole situation just stinks terribly, and I'm going to continue to dig up the details and give it to you. This is a little bit of humor for you related to Tesla. I thought it was so funny I had to include it here. Tesla has reached out to at least some of its landlords seeking rent reductions. Check this out. This is a quote. As a result of the increasing restrictions on our ability to conduct business, we would like to inform you that we will be reducing our monthly rent obligations effective immediately. How does that sound? If you went to your landlord and said the same thing, well, maybe at this time you might get away with that. There's a lot happening. But what if you were to go to your employer and say, you know what, effective immediately, I get a raise? Most of the time they would kick you out the door. But in this case here, I'd like to see if they're actually going to have their rents reduced. Would be interesting. This is the kind of situation we're dealing with when hedge fund managers claiming bailouts as small businesses. So you've got real big businesses that are taking advantage of the money that's supposed to be given to the small businesses. This is why I say do not trust the suits and ties. They'll tell you anything. They make you believe it, and then you yourself, you don't want to think, well, that's my guy. He wouldn't go against me. But time and time again, this is what happens. American Airlines to receive $5.8 billion in payroll support. It will come in 2 forms, a direct grant of $4.1 billion and a low interest rate loan of $1.7 billion. In addition to the 5.8, American expects to separately apply for a loan from the US Treasury of approximately $4.75 billion. That's one company. So just extrapolate that to how many there are and the burden that this is going to put on the back of the taxpayers. Some of it is a loan. Some of it apparently will be paid back, but most of it will not. The world's richest person is getting richer. With consumers stuck at home, they're relying on Amazon more than ever. The retail stock climbed 5.3% to a record, lifting the founder's net worth to $138 billion. This is big news because when you look at it, many of the stocks had been declining. But of course, in any market, there's always going to be some winners. Some are going to do good while the rest do bad. Of course, the economic impact really hasn't been felt yet by many, and so we can see some serious disruptions coming, but nobody really wants to hear that because that's bad news. IMF says the world will very likely experience the worst recession since the 1930s. And of course, we know what's happening here. In a sense, it's predictable because we have so many people out of work. Everything is closed up. So it's just a matter of taking the pen to the paper and figuring it all out. As I've said many times before, V-shaped recovery, or now what they're calling the soft V-shape, is still the consensus. Goldman says downturn will be 4 times worse than the housing crisis, then an unprecedented recovery. Fantastic. The recovery in the second half of the year could be stronger than anything the US has seen. That is just wonderful. Everyone is going to be so happy. Nobody's going to be hurt by this. Everybody is going to be smiling. JP Morgan is bracing for a severe recession, set aside another $6 billion to cover potential losses on loans to consumers and companies struggling to stay afloat. Their profit fell by nearly 70% in the first quarter. With a forecast of unemployment rate at 20%, of course, there's going to be a large percentage of people who simply can't pay their bills. JP Morgan shares drop after bank warns borrower default could get meaningfully worse. There's more details here in this CNBC article. I'm just trying to highlight what all of these different banks are saying, what all of these different analysts are expecting to happen. It's just going to be messy no matter how you look at it. The expectation is that the US will have a $3.8 trillion deficit, or 18.7% of GDP this year. And then in 2021, you're going to get 2.1 trillion in deficit. Both of these are gigantic. But as they say here, this is not the time to be worrying about how much we're spending. We need to just resolve the issue. But if you just take the information from this video, not even my other videos, forget about that. Just what I've shown you in this video, it should make people very worried about how their tax dollars are spent. If you're not concerned about it, if you simply want to ignore that, there's a lot of mainstream media news that's probably better for you. This channel doesn't really get into that kind of stuff. Small business funds dwindle as aid package sputters. Of course, they're not going to be able to pay everybody. Everybody wants some money. Everybody's applying, and not everybody's going to get it. What does that mean? More people are going to be unemployed. More businesses are going to fail, and it's always going to be at the small end. The JPs, the Goldmans, they're going to do just fine. This right here is from Oak Tree Capital. You might be aware of them. Essentially, this is what they had to say. What's the Fed's purpose in buying non-investment grade debt? Does it want to make sure all companies are able to borrow regardless of their fundamentals? Does it want to protect bondholders from losses and even mark-to-market declines? Who'll do the buying for the government and make sure that the purchase prices aren't too high and defaulting issuers are avoided? Or does anyone even care? Why should the SEC provide relief to leveraged investment vehicles? Why should leveraged investors be protected from pain? I think this is really good, and most people don't care. That's the point. They don't care. And all they want is for their 401k and for their 7 shares of Amazon to go up higher. That's it. They don't care about anything else. They don't care about the jobs. They don't care about the thousands of people lined up for food. They only want their 7 shares of Amazon to do better. Out of Business Insider, they're actually quoting Michael Wilson from Morgan Stanley. Bad is good. The Fed's efforts to keep at-risk companies afloat will keep some of those businesses out of bankruptcy, and that makes those bad actors some of the biggest prospective winners. The bad actors of the last cycle are getting bailed out, which could ultimately limit the malaise we typically get in a recession. The worst stocks will likely have the biggest recoveries. This is when you know you've got a disgusting and pitiful market. If you remember the image I showed you previously where you have Jim Cramer, and then on one hand it's saying best week that we've had in whatever so many decades, and then at the bottom it says 16 million job losses. In this, he's actually referencing that picture. This is what he had to say. At the end of the day, the stock market's made up of big, huge companies, not the small to medium-sized businesses that are the backbone of our economy. I agree it's messed up, but the contrast between a roaring stock market and an obliterated job market does tell you a lot about what's happening at this moment. But this is where it gets so ridiculous and so Jim Cramer, which I use as just a blanket statement about the average person in the financial industry. You don't have to like it. I know I don't. But it's the big dogs with pristine balance sheets and gigantic scale that can survive this lockdown. Now that right there just shows you how unbelievably terrible this is. And of course, more importantly, how misguided and how blind. If this is the timeline here, and let's just say we are here, there are many events along the way, and you see this bailout, for instance, as being one of the potential things that's going to be there to help you out, you're not even able to see what's behind all of that. There are many, many events that are going on that will take place in the short term, in the medium term, and in the long term, and how those will impact your investments, your livelihood, is not being addressed at all by the Jim Cramers of the world. That's all for this video. If you found it informative, hit that thumbs up button. All you gotta do is click on one button to support me. Thank you very much. If you want to see me on Instagram, on Twitter, I got content every single day on there. Definitely check me out at The Money GPS. If you want to learn how to sell online, I've got a free e-course to teach you how to do e-commerce properly. It's completely free. It's available at theamazongps.com. If you want to understand the financial system top to bottom, no jargon, no garbage, it is all in these two books. Check the link in the description. If you want the audiobook, themoneygps.com. Yesterday's video was so important, and for some reason it only hit a few people. I don't understand why, but the content in here is truly important. You've got to watch it. Click on it. I'll see you there.